February CPI came in lower than expected, and Wall Street is celebrating. But is the market misinterpreting the data? Inflation is still a concern, government spending cuts could trigger a recession, and stagflation might be on the horizon. We break it all down. Stay tuned.
Gary, thing number one, we're talking February CPI number came in lower than expected. You're saying that you think the markets are misinterpreting what's going on here and what's happening. Thing number one, February CPI is below expectations.
All right, let's go to the statistics first. So CPI stands for Consumer Price Index. That is the index that people typically refer to when they talk about inflation. When people say, inflation is running at 3% or 2%, 4%, whatever it is, they're usually talking about the CPI. So we just got the February CPI, and it showed an overall increase of 2.8% year over year and 0.2% for the month. That 0.2% annualizes to 2.4%. So, the monthly number, 2.4%, the yearly 2.8%. That was below last month's 3.0% and was also 0.1% below expectations. The core CPI, which excludes food and energy, because, Rob, nobody, people, they don't buy food and energy, right? Why not exclude it? That metric was up 3.1% versus last year, up 0.2% from last month. Those were both 0.1% below expectations and 0.2% below the prior month. Wall Street celebrated the end of inflation. They got really excited. I'm not so sure that's all reasonable.
Gary, jumping on that final point, yeah, we did see celebration from Wall Street, end of inflation. Why is that not reasonable, or is it reasonable?
So look, let's make 2 points here. First of all, there's a ton of optimism, or there was, about a CPI number that was 0.2% below last month and 0.1% below expectations. Okay, so it was better than last month, better than what they expected. But just 4 weeks ago, the market tanked and was worried by a higher than expected 3.0% CPI with a 0.5% monthly increase that annualizes to 6.2%. My point on this is it's really hard to come up with one inflation number for an economy as large as the United States. And it's definitely not something that anybody can do to 0.1% accuracy. At this point, the market has been reacting, or rather overreacting, to very small changes in general statistics. Really think about it. If 3.0%, 3% was a disaster that caused the market to go down, and now everybody's thinking, oh, great, 2.8%, we're terrific. I got news for you, Rob. That 0.1% difference, like that 3% number could have easily been 2.9, the 2.8% could have been 2.9. The truth is we've made very little progress on inflation in the last year. And the thing that I would be potentially concerned about right now, and this is something we've been talking about a lot, is cuts to government spending will throw the country into a temporary recession. Washington, D.C. has been creating the GDP numbers out of thin air with wasteful spending that adds no economic value, but it does add to GDP. This is what I referred to as a Potemkin economy. So for people who, don't have a long history in economic history, that refers to an old trick at the Soviet Union where they wanted people to see they had all these wonderful towns. And so what they did was they built a fake town, like a movie set, and they would just move it day after day. And the officials would go past it and say, oh, wow, it looks like you have a really nice town there. But if you looked behind it, it wasn't real. It looks good, but it isn't real. And so that's what Washington has been doing with the GDP numbers. They're throwing tons of wasteful stimulus at it and saying, look, we have growth, but it's not real growth. It's just wasteful spending, and they're pretending it's production. So with prices still continuing to rise, stagflation for a couple of quarters is a possibility. We could end up with lower inflation if we have reduced wasteful government stimulus. And that's what Doge is going for. Higher unemployment in government, which has been the fastest growing sector for employment, really the only growing sector for employment, that and healthcare, is starting to show up. It's going to start showing up in the employment report soon. We're looking at hundreds of thousands of people who are going to be out of work. That's okay. It's not necessarily productive work, but it will weigh on the numbers. And, my final point on all of this is if you think the economy depends on counting theft, waste, money laundering, graft as production, then you'd be against these coming cuts. Obviously, I'm for them.